Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at Bitcoin through the different time frames to get an overall idea of exactly what's happening now and the direction of travel for the Bitcoin price in the next few days and weeks. I'm also going to be looking at the candlestick patterns and how we can use them to our advantage. I'll also be looking at the fractal pattern, the 2018, which I showed you in the last week, and ascertain exactly where we are currently with that pattern. I'll also go through the current swing trade I'm on with Marathon Holdings from last week. But before all that, I'll give you a short but life-changing wisdom bite, so you don't really want to miss that. And if all that sounds very interesting, then stop what you're doing, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, so I'm going to start off with today's wisdom bite. There are absolute gems in this little wisdom bite. Okay, so today I'm going to start off with a quotation which I came across about 25 years ago, and I found this very much life-changing. And that quotation is this: please don't let your past be a burden. Instead, let it be a schooling. Now, the problem is that what I've found in my experience that for the majority of people, their past has become a severe roadblock to realizing their true potential. Both in their inner dialogue as well as dealing with people, they are forever playing the victim of their past, which sadly, they're not aware that they are engaging in self-harm to their future interests. So what I'm trying to say here is that please don't let your past overwhelm you. Instead, learn to turn them into positives and educate you instead. Now, I'm not saying it's easy, but it's something you just have to do if you want to achieve your dreams, your vision, your goals, etc., etc. If you don't, then you just have to face the consequences, and this is the harsh truth of life. But please never forget that the power is in your hands. So what this quotation is saying is that please don't be stuck in the prison of your past. Don't park your emotions on the painful events of your life. Move your emotions away from there and instead learn from the pain. Leave the pain of your past behind so it doesn't ruin your future. The harsh truth and reality of it is that your past is gone. Whether it was unjust, cruel, harsh, etc., etc., reliving the events will only harm you. The best way is to let go and move on. And that time to start is right now. And never forget the phrase I've given you many times in the Wisdom By section, and I'll finish on this, and that is, for things to change, you have to change. No one can do it for you. Okay, on with the technical analysis, and I'm on the weekly chart here. So this is the context of where we are over here. We've had our all-time high at 69,000, and we've been in this very strong downtrend, very dominant downtrend here. And we're trying to ascertain a bottom for the bear market that we've had over the last 12 months now. What level that will be, only time will tell, but there are clues in the actual charts here. One of the signs I've just seen here is this green candle here, as pointed out by the green arrow. And this is what you call an outside bar candle. So get your notes out. This is what it means. A bullish outside bar candlestick goes lower than the previous candle lows and then closes higher than the previous candle highs. And as you can see, a bearish outside bar candlestick goes higher than the previous candle highs and then closes lower than the previous candle. So what that really means, as you can see here, we went lower than the previous candle and closed higher than the previous candle close here. So this was a sign that we were going to get a move to the upside here. And those with a discerning eye will have noticed that we had an outside bar candle here. But this was a bearish candle because we went higher than the previous candle, but closed lower than the previous candle. And as you can see, we went to the downside. So a little bit of understanding of candlesticks can tell you and give you the advantage and give you an edge of which direction the market is more likely to go. Please remember, these are probabilities, not certainties. So when this happens, it's not a certainty that we're going to get this. It's just a higher probability that we're going to get this. Please also take a very strong note of this. That is the horizontal support and resistance lines. As we were coming down, we were creating these very strong resistance and support lines here at these junctures. So when we go back up, guess what's going to happen? We're going to get rejections at exactly these points with a higher degree of probability. There are no guarantees, but with a higher degree of probability, because these were very strong resistance points. As we had relief rallies into them, there will be very strong resistance points as we go back up in the bull market. So those levels are, currently the next level is the 25,000. As you can see, we came down here, wick down, and we had a very strong buy up at that point. And guess where we came up when we just had this brief relief rally last month? We came up to exactly this point here. So you need to mark these up so that you can actually determine exactly what to do when we come up here with the price. This is the other level here at about 48,000, and obviously this level here at 69,000. So for those of you who want to short the market, this provides a very good opportunity for pullbacks. So onto the daily chart here, we've got the 3 exponential moving averages. The 8 exponential moving averages, the blue, the yellow is the 21, and the white is the 34. As you can see, when we were rejected at the 48,000, at the 200 simple moving average, which is the green line here, we found resistance all along these 3 exponential moving averages, either at the 8, or the 21, or the 34. And that's why it pays to put all 3 there. That gives you a very good guide, a very good template to know exactly where the price could be coming up to. And that happened all the way down to our recent previous low at 17,500. And since then, we've come up against the resistance of the 8 especially here. And then when we moved out of there, the 21 moving average there. And in the relief rally we've just had over here, we went above it and found support on the 8 along the way, as well as the 21 and the 34. So since we broke out over here around the 18th of July, we have now recently, in the last few days, broken out from last week above these 3 averages. And if this relief rally is to go by, then obviously we're in this relief rally here as well. How far this will go, no one really knows. But as I showed you the fractal pattern from 2018, this should be coming up to the previous high over here. And that's from this low that we had on the 12th of May. So if you do a horizontal support and resistance line over here, you can see that this is a very good point for the price to get up to. And that's at 25,500, around there. And if there's enough momentum for the price to flip over this resistance line, then the chances are we're going to come up to this underside of this support line here, which is at around about the 28,000. And that would make sense simply because if you can see the 200 simple moving average, by the time the price comes up here, will be confluencing with this support and resistance here. So these are the 2 next points to take into account. And as I mentioned in the last video, as we were coming up with this relief rally here, to look out for the 22,400 level, which was to matching up with this candle here at 22,400. And look where it's just come up to here. So this could well be a very good point to have something of a 50% or a 61.8% Fibonacci retracement here, which would take it to the 61.8 here, around 19,900 to 20,000, or the 50% correction at 20,500 over here. So this is what I would be expecting in the next few days to come down here. Should we flip over this without this correction, then the chances are we're going to be heading towards the $28,000 mark, where there is more likely to have a correction back down to the downside over here. So while we're on this daily chart, I just want to give you some insight into why the candlesticks were leaving clues when they were going to have a rejection. So as you can see, we fell to the recent low of 17,500 on the 18th of June. And as we were having this relief rally, creating higher highs and higher lows over here, the market was leaving clues as to when we were going to have the actual pullbacks. Something very similar was happening at the tops of these higher highs. Firstly, we got a very strong move up to this level here, and then we got an indecision candle, as this long-legged doji candle tells us. Long-legged doji basically means a very long wick at the top, a very long wick at the bottom, and a small body in the middle. And what it signifies is really that higher prices have been rejected, lower prices have been rejected, and there is indecision in the market, and the momentum has come to an end over here. And this candle then became an inside bar candle, i.e. the highs and the lows of this candle were higher and lower than the highs and lows of the following candle, which means that the momentum has come to an end here and that we should get ready for a reversal. And that came duly with this fall here. And this candlestick pattern was giving us a clue. Of course, the market could have gone to the upside, but the probability changed with these candles, that the higher probability was going to be to the downside rather than the upside. Similarly, when we came back up again to create the higher high, we had very similar candles again at the top, giving us the same clues. A gravestone doji more than a long-legged doji, because the wick at the bottom isn't as long as the one at the top. But because there was a stronger rejection of higher prices here, it was saying that the market was not prepared to go much higher than this. And there were a lot of people willing to take profits at this point. So that was giving us an inside clue as to what the market was behaving like. And then that culminated in a fall in the price over here. But we got an opposite candlestick pattern here, which was basically what we call a dragonfly doji, where we have a long wick at the bottom and a small wick at the top and a small body at that point there. So this was now causing a bit of a confusion, that we are trying to make up our mind whether to go to the upside or downside, and to get ready either for a move to the high side in a big way or to the downside. And with this candle here, this gave a further clue that the fall was going to be to the downside, simply because we had a longer wick at the top and we closed with a bigger body of the red candle here. Again, once we look at the inside knowledge of what's going on with these candles, it gives us a very strong clue as to the direction of travel for the price. And finally, when we did top out, this was really interesting, because what we got here was a double outside bar candles. So first of all, we got a gravestone doji with the green candle over here at the top of a trend. That's usually bearish. That was followed by an outside bar candle with this red candle here, and yet again a gravestone doji-like candle, strong rejection of the higher prices. And this candle's highs and lows were higher and lower than the previous candle's high and low, and therefore this was a outside bar candle. And this candle was followed by another outside bar candle in this one here. And these two outside bar candles closed below the gravestone doji there. And that was giving you a very strong clue we are going to come back down. And if you found value in this, then please do like and subscribe if you haven't already done so. So currently we've now got a red candle forming. This is the daily chart. It hasn't closed yet. But once again, if you'll have a look, so currently we've had a very strong rally up to this point here, 24, which I mentioned in the last video that we're going to be coming up to. We're forming this red candle here. And if this turns out to be one of these types of candles, then that is leaving a clue as to what could happen here. We could well be having a correction here before we move back up again. So keep your eye on this, where it closes tonight. But please remember, there's the CPI meeting in about a few hours' time, which may determine where this price goes. And if the CPI figures are better than the market expects, then we may well have a quick run up to the upside. And if they're indifferent or worse, then we may be having a correction at this point before we move back to the upside. If we can get above the $28,000 mark here for Bitcoin, for me, that will confirm that this is the second double bottom and that this was the actual bottom for this market. So that's the sign I'm waiting for. Whilst we're not there yet, so until that happens, I still think 75% that we've actually bottomed out at 17.5, and there's still that 25% to go lower towards the 12, 13,000. But if we can make our way up to the 28,000 and go higher, then this will have confirmed that this was the first bottom and this is the double bottom. What seems to be happening from what I can see here is that there may well be a multi-month consolidation taking place in this region here. So it may well be we get to the 25, come back down, maybe back down to the $18,000, $19,000 mark, then go back up again, and then we have the proper breakout, and that would be a very good formation, a consolidation and a structure for the market to go much higher. Okay, a quick look at the fractal pattern that I showed you in the last week's video. As I mentioned, that the ups and downs of this bear market seems to have a resemblance to the ups and downs of this market here currently. So I mentioned that this bottom here and this second double bottom here resembled this bottom and this bottom. For the full explanation of all these points in comparison to the points here in 2018, please watch my last video and you'll know exactly the context I'm talking about. When we were coming up here, I said that we would more than likely come up to this white line, which is the 50 simple moving average. That's exactly where we are currently, at around about the 22,400 level. And as you can see, that mirrors what happened over here. After the second bottom, we came up to the white line and went a little bit further, this point here. And that top was the same as the previous high that we'd come to. And that equivalent is the 25,000 over here. So this is what I'm expecting. If we are to carry on following this fractal pattern from 2018, then more than likely we're going to come up to the 25,000. And then as you can see over here, when we came up to this level, this horizontal level, we got a rejection back to the 50 simple moving average, which obviously is currently at around about 22,000. So only time will tell what happens, but it seems to be following that, and it's as good a guide as we've got. Okay, moving on to Marathon Holdings, I just want to let you know exactly what swing trade I'm in at the moment. This is Marathon Holdings on the weekly chart. And as you can see, we had an outside bar candle over here. That was the trigger to go to the upside here. So I did catch that when that came up around about June, July time. But recently, last week, we closed here, another outside bar candle. And as soon as the marathon price moved above this candle here, which was at around about 1240, this is where I got in, which confirmed to me when I looked at the lower time frames that this was the best time to get in. So I've been on a swing trade from here, and I'm hoping to get up to this level here around about the $19 mark. And if you have a look, this is a very sensible resistance point here. If you look left here, you'll see that it has a very strong support and resistance point at around about the $19 mark here. So we found support here, support here, support all along here. And then when we came up, we found resistance and had a pullback. So we're going to be going back up to that point, and that would be a good place to find profits. And if the price did go up and use this as a support rather than the resistance, then that would be another point to get back in on that ride back up to the top. So only time will tell, but this is the current trade I'm in. What I'm planning to do is to let you know every time I go into a swing trade, or if there's an opportunity, I'll let you know. So please keep watching the videos and let me know what your thoughts are. And always remember, when you're trading, you can never have 100% success rate. And the price doesn't always go to where you think it is. And it's always good to be able to be nimble in the market and to change your opinion or change your goals or change your thinking and thought process. And always remember, you're never going to get the top and the bottom of any markets. If you can get the middle 60-70%, you've done really, really well. Okay, so I'm going to leave it there. And if you want to support the channel or want to make requests for technical analysis of any particular cryptocurrency of your choice, then if you go to the $ underneath the videos and click on there, then you can leave your message here. And all those people who have started supporting the channel since I came back, a very big thank you to you, very much appreciated. Okay, so I hope you found value in the wisdom bites and all the other technical analysis I did. And if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you want to leave your comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.